Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, guys, it's an exciting week here. I mean, Bitcoin is above 60,000, Ethereum is above 33,000. The market is definitely off to a hot start right now. So a lot going on. We're going to talk about some specific tokens today, starting with Blur. So, for those who aren't familiar, Blur is the one of the premier NFT marketplaces currently. So basically, Blast, which is the layer 2 project that's spun out of Blur, is set to launch tomorrow, unlocking $2 billion of TVL on chain. So since launching late last year, Blast quickly attracted millions of in ETH deposits in anticipation of the new layer 2 that promises a real yield, which is basically instead of handing out native yield or like yield in more Blast tokens, they're actually taking anything that is deposited into the chain and reinvesting it to provide yield to users that way. So they've also promised a plethora of like new applications as well. So a lot of people are really excited for Blast to launch. And so while many deposited ETH in anticipation of a Blast token airdrop, there's now the promise of many airdrops in the future from yet unlaunched projects in the new ecosystem. So we expect Blur to do pretty well here, but for now, it's only up about 13% for the week. Okay, next up we have BAT. This is definitely one from the archives if people have been around since 2017 or 2018. But Brave, which is the creator of the web browser Brave, maybe you've used it, and Basic Attention Token, which is BAT. They announced that they're going to actually move to Solana to make payouts of BAT tokens to users. So basically, the Brave browser is this product that has like built-in blockers for ads, and it allows users to kind of be paid for actually like watching ads instead of you just getting targeted for a bunch of ads. And then, sometimes retailers or businesses, they get click-throughs, that sometimes they get conversions, but to be fair, they don't really know who they're targeting out on the web for the most part. So that was kind of created as this idea that like people should be paid for watching ads, and advertisers can pay them not a ton, small amount. And so basically at the time, people were paid out in BAT tokens. So the kind of big issue though with this is that BAT is on or was on Ethereum. And so sending really small microtransactions on Ethereum is not really efficient. Gas costs are too high. It's just too slow. And so what they did instead is they basically had people who wanted to get BAT tokens go through a custodial wallet of some sort, which unfortunately a lot of the time required KYC. So a lot of people weren't too happy with that. It wasn't like a great solution. So the move to Solana, it's solving a huge issue for them because basically they're going to be able to make those microtransactions. And then users only now have to connect a Sol wallet and receive their BAT rewards. So despite this market, like I said, is up quite a bit on a lot of things, and BAT is only up 15%. All right, next we're going to talk about AAVE. Last week, Gauntlet announced in a governance forum post that they are no longer going to provide risk advisory services to the DAO of decentralized money market protocol AAVE. So this was pretty significant. Gauntlet is one of the big projects that they do either risk advisory, token advisory, and they kind of especially on DeFi protocols, monitor do different scenario stress testing to understand okay, are there any dangers here to adding this token for listing or for lend borrow? What are efficient, LTV rates, things like that. So this was not great, obviously. The firm actually stated that they were given inconsistent guidelines, making it impossible to work with the DAO. Most recently, for example, Gauntlet struggled to push through proposals that would have protected AAVE from bad debt as a result of illiquid loans made via the Curve token. I think I've talked about Curve here a good amount and how illiquid tokens having bad debt on a protocol cannot be good for them. In addition, they also received mixed signals on proposals, including last month when the community pushed back against a proposal on how to distribute ARB token rewards, but received overwhelming support for an identical proposal dealing with the distribution of OP token rewards. So, while not stated explicitly, some have alluded to the behavior of Mark Zeller, the leader of one of the largest token delegations, as the reason for Gauntlet's resignation. So this obviously came as a bit of a shock. Most people were like, wow, most people don't really quit it out. And then just yesterday, Gauntlet actually announced that they're signing on as a risk curator with Morpho, which is a direct competitor to AAVE. So with all that, AAVE is still up 19% for the week, but it sounds like they may not be the easiest to work with. All right, last up, we're going to talk about Uniswap. So if you were not paying attention, this was the big news in the DEX sector, and actually, I think in all of DeFi last week, which came on Friday. The Uniswap Foundation issued a proposal to turn on the fee switch for the Uniswap decentralized exchange. So many groups have tried in the past to activate the fee switch. I'm pretty sure I've talked about it a couple times here. And this is basically the piece of code that's built into Uniswap's protocol that allows it to redirect fees that are traditionally paid out to essentially the market makers or liquidity providers. And that gets, taken out and paid towards the member, could be token holders, stakers, a treasury wallet, whatever. So like I said, the fee switch has been a huge problem back and forth. The big difference between this proposal and others is that this one was actually put forward by the Uniswap Foundation, which many believe was, in some way kind of blessed a bit more by Uniswap Labs and their lawyers and whatnot, because in the past, all of the proposals have been pushed by outside groups of token holders, early stage investors, et cetera. And so as a result, a lot of people actually think this one could pass. The token actually initially shot up about 50% on the news, and it sparked a broad-based rally in other DeFi tokens as well. Yesterday, Uniswap Labs, which is the for-profit part of Uniswap, they also released a browser extension for their wallet product, which previously lived on mobile only, which is now going to allow users to use it in the same way that they do in their MetaMask wallet. So again, some exciting things for Uniswap here, and definitely some big implications for DeFi. If they manage to get this fee switch across the finish line, who knows what other projects might do the same. All right, guys, that's all I have for you guys this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.